Morning, everyone. Thank you very much for joining me. This is the Crypto Minute. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is r@fxcm.com, and today is Wednesday, it's the 22nd of June. Just going to bring up our high-risk investment warning. For those that have joined from our previous webinar, thank you very much. And to those that haven't, welcome and good morning. And here's our market commentaries disclaimer. Okay, and we would refer to market scope and trading view. All right, here is Bitcoin. So this is the way I kind of see it. I've seen this called a double top as well, perhaps some sort of weird triple top. I don't think it really matters. I think it's playing. You see, it's a topping pattern. I think most correctly, it would be a peak, trough, lower peak, lower trough. So I think that's the most correct way to do it. And thanks, Anna. Yeah, I think we must do that. Yeah. Hey, Zanetta. Hello again to you. Let's take a look at the patterns here with Bitcoin. Patterns again, I think probably interesting because the measured moves are in play at the moment. I don't think the measured moves are guaranteed by any stretch. The turquoise measured move is basically hit. I think we would, if perhaps it's not the bullseye, but it would be this sort of circle after the bullseye, right? So that's pretty cool to see that measured move. But the head and shoulders, of course, gives us even a lower target. And let's get rid of the targets because I think they're distracting us from what actually is going on here. And I am concerned that the downtrend. Let's get rid of the head and shoulders as well. I think that's confusing the issue too. And I think we've got to think of this in trend. That's the way we need to think about Bitcoin. Forget about everything else. Forget about the strange idiosyncraticities, sorry, that didn't come out right, of technical analysis, idiosyncratics of technical analysis. Let us just understand the trend, the wave, the path of least resistance. And we've got a peak, we've got a trough, we've got a lower peak, and we've got a lower trough. Okay, that is a downtrend. And that downtrend remains in force until the definition is no longer satisfied. Okay, there's only two ways that the definition is not going to be satisfied. The first way is if there is a higher peak. That would defy the definition of downtrend. We will not have a technical downtrend then. This, by the way, is, in my opinion, highly unlikely. Okay, to jump from 19,000 to 50,000 without a pullback is highly unlikely. Okay, however, what could happen is we could get a impulse pullback and impulse. And what's happening here is I think probably would be the best option for cryptos, because here you would have your higher trough followed by a higher peak. That is the definition of an uptrend. The first is not, sorry, this first is not a definition of an uptrend. All it's doing is it's defying the downtrend. So it's stopping the downtrend. It's not starting an uptrend. Okay, an uptrend must have a higher peak. What am I doing here? This is a lower trough. Confusing myself. An uptrend must have a higher trough followed by a higher peak. So if we get that, you know, I think there would be cause to celebrate. Yeah, we don't have that. We have a downtrend. Now, if we get a pullback, okay, if we get a pullback, all right, that's not a cause to celebrate. That's a cause to become concerned, okay, because it's setting up potentially the next leg down, which will take out current troughs. Okay, this is called a bear market rally, and it's not the bear markets that hurt, it's the bear market rallies that hurt. And I think that there is still I'm sorry to say, I feel that there's too little pain in the Bitcoin crypto space to be classified as panic selling. Now, again, I'm going to just tag on to subject to correction. Okay, we could be near the bottom, and if we are, that's fine. The peaks and troughs will tell me I'll get a higher trough followed by a higher peak. If we get a rally from here, okay, I would be extremely concerned that the market is setting up for the final push. And the reason I say that is I mentioned it earlier in the week. I took a look at the tweets. So I just put hashtag Bitcoin and just went down and read all the tweets on Twitter. And there's just too much optimism left in those tweets to be a shakeout. For me to consider this a shakeout. A shakeout is absolute capitulation. Yeah, I did see it. I haven't read it yet, and I didn't see it. Thank you for that. I haven't read it yet, but there is, I think, a real chance of capitulation here, because I want to tell you a story. Okay, let me give you a story. This is the real story. I'm just going back probably 2012. I'm guessing, no, it would be even before that. I think it's 2010. Okay, I think it's 2010, and I went to a weekend seminar. It was a technical analysis seminar. I went to it, and during the break, you know, I sat down with this lady and we were chatting. And this is about 2010, and what came up in the conversation is that she's looking to trade the market. Her late husband was a trader, so I go, okay, what happened? He jumped out of the window after he lost everything in the tech wreck. You know, it's a horrible story, but that's capitulation. Okay, so now please don't take this the wrong way and forgive me. I'm not wishing anybody that fate at all. What I'm suggesting is that that type of desperation is not being reflected in the tweets yet. Okay, I mean, you've got to be really desperate to do something as awful as that, and that is what panic selling effectively is. It's starting to get to a point where I don't even think 15,000, you know, it is a target. Total capitulation takes us probably below 10. You know, hey Howard, So again, I'm just, I'm thumb sucking that figure, but complete capitulation is that there is zero bid in the market. You're trying to offload your Bitcoin, and there's zero bid at your price level. That's what capitulation is. The closest is $3,000 lower. That's capitulation. Okay. And that's kind of what I'm very, very worried about. I don't think that I don't think I'm being overly dramatic here. I hope that this is not a scenario that plays out. But the truth of the matter is, okay, the US dollar right now, and I've said it a few weeks in a row now, is a runaway freight train. Okay, there's nothing stopping the US dollar at the moment. Okay, nothing. Okay, the balance sheet is being reduced aggressively. Dollar has been softened out of the market. We just have to go to economics 101. That's going to push the price of dollar up. Now, incidentally, it doesn't mean that there's not going to be short-term rallies against the dollar, but I think the long-term equilibrium point is higher. If the long-term equilibrium point is higher, Bitcoin is in a ton of trouble. Okay, gold is not in as much trouble as Bitcoin, but Bitcoin's in far worse trouble. And the reason for that is because gold is a store of wealth. Bitcoin isn't. Okay, so the idea here is to keep an eye then on the stochastic. The longer we stay in this 20 area, the more nervous I get of absolute capitulation, where the tweets are almost null. Nobody even wants to tweet about Bitcoin anymore because they've been ravaged, absolutely been savaged, ravaged, whatever, by a decline. That's kind of what I'm seeing with Bitcoin. All right, I may be wrong, and I'm happy to be wrong. How will I know if I'm wrong? Higher trough followed by higher peak. Okay. Higher trough followed by higher peak. Then I'm wrong. Okay, then I'm wrong. And then we'll say, okay, that was a bleak assessment, Russ. You were way off the mark there. And I would sort of say, well, you know what I say about forecasting, it cannot be done. So I'll use that to my advantage. But the idea here is we watch the trend, okay? We watch the trend and we watch the momentum. That's as much as we can do now. We don't pick the bottoms, okay? Because that's going to be like catching a falling fridge, okay? What we do is we treat any bounces with utter suspicion. Okay. Anna's just writing here. She's writing some interesting things. The miner cost of production was 17,600 on the weekend. Okay, so the sort of margins, you can see margins have thinned out to really thin levels. Miners starting to switch off because they can't cover costs. Reaching the bottom, but perhaps perhaps the argument to be made there is, well, perhaps the miners are switching off, so there is going to be a supply constraint. That may be that's one way I think we can keep an eye on it. If that's what's going to happen, fine. I want to see it reflected in the peaks and troughs. Okay, there's way too much negativity here, which possibly as a contrarian may signal some sort of bottom. But fundamentally, I think it's just simple mathematics. Your denominator is going to destroy your numerator in this case, and there is zero anybody can do about it. Zero. The Federal Reserve is just way too big and strong. So that's kind of my bleak assessment of the crypto market. I think it's got very little to do with any value that Bitcoin has, and all to do with the value of the dollar. Again, I'm going to just tag on subject to correction, right? So that being the case, here was the squeeze, here was the breakdown. Okay, get rid of that. Get rid of that. We know which direction it took. Took the path of least resistance, right? Here is the momentum. All right, before we go down to the hourly, let's throw in some RSIs here. I think RSIs actually would be worth keeping an eye on here. So let's throw them in. All right, so it's tending towards this oversold level. Let's just take a look at the daily. Also pretty close to sort of our oversold, not quite there yet. Now, this is going to be interesting. The RSI here, we definitely need to watch. One thing we must take note of, even if we go oversold, okay, even if we go oversold, if we do move into a panic selling, we're going to get deep into oversold. Okay, it's going to get really savage to the downside. So the oversold reading here, now probably putting this at 10, I think in a case like this may be sort of prudent. But the idea here is we are getting pretty close to an oversold position. But if there is a complete shakeout here, I'm not sure we can trust the oversold condition this time. All right, let's go down to the hourly. All right, so you can see that the look what's happened here. Rally, okay, let's rally. Targeted by shorts. I mean, this is the easiest money the shorts have ever made. Let's just bring in the pivots from yesterday. Okay, yeah, so they just waited until it got through to R2. So, okay, broke through R1. R2, nah, this is the time to short. Savaged it to the downside. So any rally here, okay, whoever's shorting, he's just making a ton of money at the moment. Okay, why would they stop? Okay, it's like kind of like, what do they say? Shooting fish in a barrel. You know, it's kind of, we just waited to get to a resistance level. Okay, let's apply the pressure. Okay, let's wait for the next one up. Let's apply the pressure. Eventually, the bid's going to disappear. Okay, there'll be no bid. So, and then I found a new word. I read a new word just I didn't know. Apparently, it's been around since 2013. HODL. Have you guys heard of HODL? HODL. Hold on for dear life. It's just the kind of when the HODLs disappear. I think that would be the end of the capitulation. You know. So it's a very bleak assessment, but I can only change it. I can only change it when the stochastic, the primary trend stochastic, moves out of the 20 area. I can only change my assessment of trend after the fact, not before the fact. It's impossible to forecast. If I say there's going to be a capitulation to 10,000, you know, I don't know if it is or it isn't. I'm just trying to make a point that the panic selling is probably still to come. It might fall to 5. I don't know. It might fall to 12. But the point is, as long as we've got the lower peak, lower trough, as long as we've got a downwards momentum, you know, anybody that's trying to pick the bottom here, better watch out below, because they are playing with absolute fire. The shorts here are literally having the time of their life. They're just picking off the longs as they bounce. Okay, so let's go through to the dollar. This is the nemesis of crypto at the moment. It's the US dollar. All right. I'll say it again. This is a freight train. Okay. This is the freight train. Okay. It's unstoppable until the engineer starts slowing down the engine. It's feeding the engineer starts feeding the engine less coal. Okay. When the engineer starts applying the brake, okay, that's when it stops becoming a runaway freight train. Okay. But until that, don't get in its way. All right. Unless the numerator has got some sort of intrinsic value. Okay. So gold has an intrinsic value. Oil has an intrinsic value. Copper has an intrinsic value. Okay. Bitcoin, nobody's made the case for me yet that it's got intrinsic value. Let's change this here to today, just to neaten this up. All right. So we are, what happened there? My system crashed. Give me a moment. That's bizarre. Give me a moment. I just want to bring it up again. I must have closed it by mistake. Yeah, so Rob's saying he likes that huddle. So I only found out what huddle meant yesterday. Apparently it's, you know, quite a common term in the crypto space, but it was taken from a bulletin board or some sort of forum where the guy that was writing it admitted to being drunk. This person said he had too much whiskey, and he just wrote this really long note saying that, well, trading Bitcoin is too difficult, so he's just going to hold. But instead of writing hold, he wrote huddle. It was drunk. So it was adopted. Sort of an hour later, there was huddle memes that were already being distributed, right? So let's just bring up my layout here. I want to, yeah, the main layout. I don't want to save this. That's weird. I've lost all my data. All right. Let's just. Going to open layout. This is odd. Let's use this one. It's usually my backup. Is it going to work? So weird. Oh, there we go. All right. All right. This is my backup layout. That's weird. Sorry about that, guys. So anyways, let's just go back to the US dollar here. Yeah, it's weird, Rob. So Zanetta is saying, well, what about the dollar? Is it just going to carry on going up? let me just link this up. And it's not going to move in a straight line, Zanetta. We know that the markets ebb and flow. We know that it ebbs and flows, right? And that's exactly what I would expect to happen. I think we would get these impulse moves, corrections, impulse moves, corrections. How far up is the dollar going to go? I don't know. Nobody knows. But as long as the economics suggest scarcity, we must respect that, not fight against it. Okay. When we spoke about in our previous webinar about a Bernoulli distribution, 50-50, how do we get it from 50-50 to 60-40? And I think that's where the trend analysis comes in. If we can kind of trade in the direction of the trend instead of against the direction of the trend, based on a Bernoulli distribution and a Bernoulli trial and a binomial distribution, then I think we can talk, you know. But to guess the top of dollar is invariably going to set us up for failure. We may be at the top. We may be. I don't know. Okay. The only way I will know is if we get that lower peak, lower trough. Again, how will I know if we're at the bottom of Bitcoin? We would get that higher trough, higher peak. That's the key. Not to forecast. Not to forecast. That's a mistake. It is to be proactive as soon as definitions are met. That's the way I think the market should be approached. And the reason that I think they should be approached is because there's way too many variables to handle. You know, just again with the Forex market, you know, no real economic model exists to forecast Forex rates. And that's different to the share market. Share market, we've got discount models. Nothing really like that in Forex. It's just too many variables. So Anna says, it's incredible to think it costs an average $17,600 to mine a single Bitcoin. Yeah, so my first thought there, again, and I probably got to give it more thought, but just, you know, my initial thought there is, of course, is it that high because of, is that all energy usage? And if that's all energy usage, right there, you can see, you know, the argument coming to life. You know, $17,600, but I'm earning $70,000 on each Bitcoin I mine. That's a terrific cost benefit. Okay, but if I'm only making $3,000, okay, then and chances are it drops below that. The machines are very expensive. Again, so that's something I don't quite know. I'm going to take your word on that. That a large part of that is made up by the hardware. I'll probably try, and it's very interesting. I'll probably try and do some research on that. During the bull, it was impossible to buy. People were flipping machines. All right. So this is the, I guess, the environment that we are finding ourselves in at the moment. I think the dollar is key to watch here. I know that I'm probably, you know, being way too bleak, and I'm happy to be proven again incorrect here. But the only way I'll be proven incorrect is when I get that higher trough, higher peak. And until then, okay, the primary trend is down and the primary momentum is down. Okay, going long against the primary momentum, you know, as I said before, watch out below. It's just, it's not, that goes against the coin toss example. Then it's not 50-50 anymore. Then it's kind of like 70-30 against you. Remember, we said we want to play the odds, right? So let me see if my math is any good here. 70-30, what would that be in odds? So it would be, so let's say there is 30% chance of success. So it would be 70 divided by 30. So you kind of would have odds of 2.3 to 1 here. Okay, and that is just to show you, you've got the risk to reward. So you're risking 2.3 units for every 1 unit of reward. Now that's a mug's game. Okay, that's a mug's game. So if you're going long, okay, when the odds, okay, are so heavily stacked against you, go to a casino. You're going to have way more fun. Okay, so that's the key here. Okay, that's what I'm talking about. So instead of thinking about this in terms of perhaps how right is our analysis, I think we can start thinking of it. What about in terms of playing the odds, playing the probabilities? So this is saying, what is 2.3 to 1 saying? It's saying, okay, that out of 3.3 turns, 2.3 is a fail and 1 is a success. Okay, that's not the way to approach the market. Give your money to a pro. You're not going to succeed. Mathematically, I can tell you straight away, you're not going to succeed, and I can say that with absolute certainty. So, so that's the situation that we're in at the moment. If we want to kind of work with the odds, again, this is now more. I haven't really thought about this through, but I would suggest, you know, perhaps going back into the neutral area would shift the odds from 70% against to, let's say, 60% against, 50-50. But the idea here is we're in the weak zone. Odds are against bulls here. Okay, don't play that game. All right. Any questions? Any questions? Please go ahead and type this in. We're gonna build on this statistics tomorrow. I just want to warn you. In my mind, I have got an idea of a formula I want to introduce. It's pretty mathy, so I've got to think about how to sort of do this on the webinar without scaring too many people away. But if we can get it, I think that it will be really helpful. Okay. Yeah, 70% is just a figure out of my head. Yeah. No. It's just a figure out of my head. No. Just to make the point. Yeah. What I'm saying here. So just in terms of that, Anna, okay? Remember, the whole idea was we talked about a 50-50. We talked about a 50-50, right? You're flipping a coin. You're either going to get a head, you're going to get a tail. One way or the other, you know you've got a 50-50 chance, right? If you are betting $5 either way, over time, it makes no difference. You're going to come out break even. Just 1 cent, sorry, not 1 cent, 1 basis point move either way. 1 basis point, when I'm saying 1 basis point is a percent of a percent. 1 basis point either way disrupts the whole probability. Playing a game with a 1 basis point against you on a $5 payoff, a $5 either way, you're at a disadvantage. You're going to lose money over the long term. 1 basis point off. So forget about 70%. We can call it 50%.01. Okay, that's still if the payoff is parity, don't play the game. The odds are against you. You understand? So, and I would suggest that we're not talking 1 basis point here. I said 70% because this is severe. We're talking severe here. Okay. Okay, Howard, just shoot me an email. Shoot me an email. I'll explain that. I'll explain that. All right, guys. Any other questions? Any other questions? All right, let's wrap up here, and we will carry this on tomorrow. Thanks very much, guys.